Hello everybody, this is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello everybody, what a week has been. Well, basically, because I'm based in UK, as you probably know, we just have a general election, and the election really is last Thursday has been an eye opener, and which I'm going to talk a bit more later on. And also, we have the week suddenly on Friday, a lot of messages coming out from US, and now, as far as I can understand, the US is not putting on the extra tariffs on the Chinese goods. Which is supposed to become effect today. And what is basically so fascinating this week is how people actually see sort of, manipulating the market accounting through news and stuff. Like, for example, for the UK election, there was a lot of, different advertisement about the elections from the different parties and so forth, and everybody was sort of watching it, and basically mostly to the pounds against other currencies, and also the FTSE 100, the UK index. And then you sort of see over the week before Thursday, the basically the pound go up and down a little bit, but mainly quite strong because everybody and the stock seems to think the Conservative is going to win, and possibly win quite big as well. So the pounds have gone up quite strongly, and which I noted last week as well, and effectively going up and down in the range, ready to break out. And basically that's how it was. But then the FTSE 100 basically not doing much. It's relatively going sideways, and it's sort of under a cloud, so to speak. Even though there's a lot of talks of possible Conservative having a big majority, the FTSE index don't seem to agree with it, which I mentioned last week in an update as well. So and along the way, and you basically see the British pound try to break, from out of its recent trading range, and nothing much seems to happen. And then on Thursday, on the actual election day itself, which basically was watching the market, just have a look to see how things are. You see the both the US against, the British pound against US dollar and against the Japanese yen has gone down, right from about 9:30, 10 o'clock. It reached, for the US dollar, pounds against US dollar, it reached 133, 132 something, 122.50, and then come back down again. Against the British pound against the yen, it was 142 or something, those kind of areas, and then come back down again, 143. Throughout the whole day, the British pounds gradually against other currencies coming down slowly. So against the US dollar, it was going down back to like 130.50 area, which is very close to my 280 stop loss level. And against the Japanese yen, it's gone down to 141 or something, 142 areas. So it was relatively quiet, and as if the market very worried that the Conservative is not going to have a big majority. You really worry about it. And right on the dot, around 9:30 evening. So what happened is about 10 o'clock, UK's polling station is going to close. And traditionally, what the basically from BBC News as well as other UK-based news channels will basically come up with some sort of exit poll, and the BBC one is mostly the good one, so to speak, and everybody's sort of watching it at 10 o'clock, see how it is. So, but I was watching the whole event, so on the news, I was on the internet, and watching the price of British pound movements, and see around 9:30, really suddenly, something triggered the pound's movement, and then against the yen and against the US dollar, it's gone back up. Not just gone back up, but actually go to the top of the recent range and a bit more, basically a bit more. And then when the exit poll comes out at 10 o'clock, the market basically gone quiet like 5 minutes, and it jumped, and there's a big majority. I think Conservative get 80 plus more seat than what they have. previously or something like that. And they basically said, I mean, the expo said predicting a big conservative majority. And the pound against yen against US dollar just shot up, right up to against the dollar is 134, and then slowly creep up to 135 and come back down a bit again. And then for British pound against the yen, it gone up to 145, then 147, very close. I think reached 148 and then come back down again. So this is a type of things that you sort of see quite, because I'm quite, skeptical about the financial market. Somehow, something seems to, or someone in the market seems to know something well before the exit poll and gone into the market and push everything out. Or the other way around, we also see is maybe the market is actually doing something what we call tree shaking, basically shaking off all the weak holders. So moving the market, moving the pounds against the yen against the dollar to its lower recent low floor area, and then suddenly, before the market turns, somehow they know when, and then go back in big time, and the market just jump back up again. It happens time and time again. It's not just on shares or currencies, a lot of other trades as well. And I just see that manipulation happening. I'm just wondering, it's like, how the hell people know so half an hour beforehand to go into the market, push the British pound, for example, against the USD from 130.50 up to 133.50. That area is like 2 or 3 cents suddenly, and then obviously gone back up a lot higher. But like, who knows all this stuff? Somebody knows something. That's why I'm always skeptical about the stock market. People say there's no stock manipulation. The market is efficient. No, the market is full of people trying to make money, legally or illegally, so long as they don't get caught. Those things can happen. And then you look at on Friday, and the news from the U.S. Government, basically, there was some news from Thursday night. Wall Street Journal said the U.S. government is going to have some sort of agreement with the Chinese government, and Chinese going to buy a lot more agricultural product from America. And in doing so, America is going to stop the extra tariffs which is coming on today, and plus roll back some of the tariffs up to 50% or something. And then you have Donald Trump comes out and actually said, nope, Wall Street Journal is talking BS, and actually tweets about that and said Wall Street Journal totally wrong. And then later on come out and Donald Trump come on his own with his own tweet, said, yeah, we are still talking to the Chinese and there's big things coming. And then some, there's a big deal coming up. All in the space of like half an hour, and moved the market. And you can see the market initially say when the U.S. market, the Dow Jones moved down like a little bit, and then about negative 100 points. When Donald Trump tweeted to say, whatever Wall Street Journal has reported was a lot of hot air, fake news. And then suddenly, after half an hour later, he said there's some, big announcement or something good is happening. And then actually there was some news coming out, and it said, Donald Trump tweeted again, half an hour later, say, yeah, we got a big deal with the Chinese. Chinese got to buy a lot more agricultural stuff. We got to roll back, stop the tariff on 15, roll back some of the tariff. And then the market suddenly go up 200 points. Now the market has been, U.S. market has been sort of expecting some sort of agreement. I mean, Donald Trump, like I said a couple of episodes ago, been trying to manipulate the markets through his tweets or his comments, and then moving the market down a little bit when everybody thought there was might not be agreement, because I think about a week or two ago he said, we're not in a hurry, try to sign a deal, it doesn't really matter. And then now suddenly say, we got a big deal over here, that kind of thing. So it's very much like, from my point of view, is manipulating the market, because I personally feel this extra tariffs, or that's supposed to come on 15, which a lot of people read about already, that it's going to affect not just the normal business type of imports, but also a lot of consumers' products like computers, laptop, iPhones, toys, and so forth. And I personally do not believe that Donald Trump had the guts to actually put it on, because it have a lot of detrimental effects, because all the tariffs being put on so far is very much on the business side. The consumer don't really feel the pinch yet. But if the one on the 15th, today, if you have gone on with the extra tariff, it will really go to hurt the consumer's product. But it won't hurt right away because obviously only, as far as I understand, account to if the new tariff comes on, so it account to new imports coming in from China, that kind of thing. But it probably will happen in the next 3 to 6 months. But it definitely, if that was put on, it will affect the sentiments, especially now it's Christmas. Thanksgiving just gone past, and then we have Christmas, and then suddenly Donald Trump is actually saying, okay, I'm going to put an extra tariff, and then call Chinese bluff. Then U.S. market is going to tank. And he was just trying to find an excuse, as far as I'm concerned, to try to not to put on the extra tariffs. Now, the tariffs itself, and as far as I can see, whatever, the U.S., Donald Trump is talking about with the Chinese, with this deal, I just feel personally that the Chinese always been saying, I will only, do whatever to make a trade deal if it's like balance, we respect each other, and you also roll back some of the tariffs. And Donald Trump has been saying for weeks, to say, no, we're not going to roll anything back. Very much like U.S. against North Korea. U.S. would demand North Korea do all sort of things first about disarmament, about the new capability of stuff. Then they think about roll back their tariffs. But from U.S. to the Chinese, this doesn't work. Chinese basically stay firm, and then calling American bluff. And American obviously blink, and this ends. And also, I personally believe it's just Donald Trump don't have the guts to actually roll it forward. Okay, so the Chinese know about it. Also, the agricultural vote in U.S. is quite big, and if the Chinese cannot, if Donald Trump can get the Chinese to agree some sort of deal to buy more agricultural products, that will be good win for Donald Trump going into the 2020 election. And that seems to be what is happening in the case. However, the market, the Dow Jones basically tank and come back down, and basically down by 100 points and go back up like 30 points. Very volatile yesterday, because most, I think people were happy that there's some sort of deal and a delay, or not delay, a cancellation of the extra tariff on Sunday, on today. They were not clear on the exact details. There was just a lot of, hot air, no actual figure. Basically, Americans saying Chinese got to buy a lot more products, agricultural product from U.S. and that's more or less it. And the Chinese come out and say, yeah, we're going to buy a lot more stuff, but didn't say how much. Now, Donald Trump in October, when the Chinese went to the White House, he just say, jokingly or not, say the Chinese committed to buy 40 billion or 50 billion of products. Now, but he didn't say anything this time. Effectively, as far as I'm concerned, is what I said previously as well. The Chinese got to buy some more extra agricultural product, because they used to buy anyway. First of all, they have a very large population. Soybeans is basically feeding the pigs, and then they need a lot of pork and so forth as well. So the Chinese, because of growing appetite, they need to feed its people, so it will be buying anyway. Secondly, because of the swine flu, a lot of pigs are dying, so they need to buy extra pork from other countries, especially U.S. if it's allowed to, and basically to basically fill up the reserve, and also to supplement what they've lost, so to speak, because they caught a lot of pigs, just like the chicken flu years ago, 2003, those kind of areas. So the Chinese definitely go and buy, but however, the Chinese, from as far as I'm concerned, when I'm being Chinese myself, you're not going to buy 40, 50 billions, whatever the Americans say so, unless there's actual need to feed its own people, plus cover whatever reserve it has been used to deplete it, and to make themselves good again. So it's unlikely buying 40 or 50 billion, more like maybe the maximum last time they bought about 20 billion in 1 year. They maybe buy 30 billion this time, because they have to cover up what they've used already in reserve, plus extra pork to feed people, because while they try to fight the swine flu in China, it will take time to build up their poor population again, so to speak. So it's it won't be surprised to see Chinese going to buy between 30, maybe 35 billion, but not around 40 or 50 billions. Also, if the Chinese just going to buy whatever Donald Trump said, the Chinese, as far as I'm concerned, lose face, because they already said they only buy whenever the market needs, whatever their needs are, they will go and buy, and they buy from America. That's no problem. But the amount of purchase is not predefined because they don't know themselves yet. I don't think they have actually made an idea how much. But Donald Trump basically come out and say, "Oh, you got to buy all this stuff from us," and they're trying to move maybe move the market, but more for me, it's more like trying to buy the American farmers' vote, so to speak. But there's no substance to say exactly how much, when, and this 40, let's say 40 billion, is it per year that Chinese going to buy every year, or just over 2-5 years period? Nobody knows. But if Chinese was forced to buy 40 billion, for example, per year, they probably do 1 year, not do the next, because they don't have that much appetite to actually use it. Where are they going to put it? Put it in the freezer? You know, if they're going to use it, it's going to get rotten. And food only lasts, even you put it in the freezer, lasts 2 or 3 years. What happened after that? So I think the Chinese are going to buy what is actually needed. Also, during this trade war that's actually happening, China has been going out other countries to buy soybeans. They've been going to Russia, it's go to Brazil, Argentina, to try soybean and pork and stuff around the world. You know, those are just newly established agreement to buy the extra agriculture stuff from other countries, source from other country. They're not going to stop it. They don't care what American might come back and say, buy this or not, or let them buy back or not, because the Chinese will just like the American. Since the American has made it difficult for Chinese to purchase all this product from America, the Chinese got to move and source from other countries. They're not going to stop it, even if the American come back and say, yeah, all tariffs are gone now, come back and let's do business together. They will not go back full-heartedly, in full throttle, in my view, go to America and buy all this agricultural product, because they know that America, with Donald Trump in the White House, could just basically say, okay, fine, suddenly should say, oh, I put on tariff because Chinese didn't do this or do that. The Chinese feel very uncomfortable. They're not being protected or guaranteed that there's definitely going to be a market that Donald Trump might, renege on their promise. Same thing for America. America may think, Chinese going to renege the promise, and the Chinese has always been, say yes, you do it, but take a long time, or sometimes just basically don't do it at all. So they would continue to leave the tariffs on, which is fair enough. But as far as I can see, is this back and forth tit-tat-toes and things, just more or less to me, it's just finding an excuse not to put the tariffs on the 15th, because Donald Trump will well know that the tariffs is not actually on the Chinese exporter, it's the American importer. They have to pay that price when they the import duties, the extra tariffs, when they import some products from China. And so if they put the extra tariff on, I think the inflation in America is going to go up. I'm not living in America, but from what I heard on the internet and read on news, is that there's already quite a bit of inflation on the food prices in America. I could be wrong, but if this extra tariffs put on top, then there's definitely a lot more inflation going on. So it's not going to help Donald Trump, not going to help America, definitely not help Donald Trump's re-election. So this is all like happening, and you can see on this what's actually in US and UK and China deals, all sorts of things coming on last week. It's very busy, but if you step back and look at it, it's like people using all sorts of different tactics to try to manipulate the market, manipulate for people's vote, manipulate people's feel, and then basically manipulate the market. So it's been very eye-opening as well. So a lot of things going up and down, up and down. So so for me personally, it has been a very profitable week because of the election, and also because my system say go in. In fact, my system has been saying going into the British pound for quite some time, and which I will talk about a bit later on as well today. And it just basically is quite eye-opening for how much people can manipulate the market, and how much people can actually using a system, if they have a system and stick to a system, and you can make loads of money quite out of it. And so this week has been a profitable week for me, and I hope it has been a profitable week for a lot of you guys as well. So let's go to my next bit, which is basically my portfolio update. Okay, first off the bat is Apple, and across the board, short term, medium term, and long term is a buy. For Amazon now, short term is a sell, like same as last week. Medium term is neutral, and long term is a sell. So again, it's neutral. I'm sorry, it's similar to last week. What happened is the Amazon share price tried to move on the side, basically side trend, and try to break out a side channel, and it tried, and especially last week and also this week with the fluctuation in the market, I'm very surprised that Amazon didn't actually move up higher, and especially now it's a festive season, and you expect that Amazon is going to make a lot of sales and stuff, but the share price seems to be doing the same thing. So it's quite odd as far as I'm concerned. And it did try to break above the 200-day moving average, try to break above stuff, but it just quite promptly come back down in a couple of days. So it's just basically sidetracking. It's not doing much. So quite surprising, and it's just continuation of what I've been saying the last couple of weeks already. And USD against the US dollar, and in fact, USD against the US dollar. British pound against US dollar, euro against dollar. If you look at the charts, it's been trying to go up, and so same thing for the AUD against the Australian dollar against the US dollar. Short term is a buy, medium term change to a buy, long term is still a bit neutral, but the price been very fluctuating. What is basically, I think from what I can see, the prices on the foreign exchange, some things that have been tracked on this portfolio is that the American dollar is weakening, and all the others, major currencies seems to be getting strong. The first off the bat, obviously, is the British pound. Has been doing that for 2 or 3 months now. But then I think the euro is now catching up, so is Australian dollar. So you can actually see if you got a chart, look at those currency. Is on a upward trend, a slight upward trend. So US dollar basically is weakening across the board, and Australian dollar is taking advantage of it. So short term, medium term is a buy, and long term is neutral. Going back to the crude oil and Brent crude and the US crude, they more or less, short term is both of them are buy, and long term is buy as well. But medium terms for the Brent crude, it is a buy, but for the US crude is neutral. But again, this has been going sideways, similar to Amazon, but it's trying to break above the 200-day moving average, and has been doing so for the past week. So it's doing pretty well, and this is in the backdrop of Saudi Arabia have floated one of the oil company, Aramco, and make quite a lot of money out of it. But the noises coming out from the news is that it's not well received from internationally, and it's very opening the IPO, so to speak, in the Middle East, Saudi Arabia area and its neighbors. So this against the backdrop of the trade war continuing with Chinese and US, and of also the slowdown of the world economy, so to speak. So the crude oil is not moving up much. From the chart as far as we're concerned, it's going to go up, but also from my trend following system, but it's still more or less doing a side channel pattern. It's trying to break up, so watch out for those. DAX in Germany in short term is turning back to buy now, and medium term is neutral, long term is a buy. Dow Jones is buy across the board, but you see the fluctuation last couple of weeks, so to speak. That's non-farm payroll last Friday, and then you have always Donald Trump's tweeting about things, and it's basically the price. Dow Jones is gets up and down and down. It's still staying upward trajectory, but it's like try to find its top or find a reason to continue, but it's just quite volatile lately. For FTSE 100 in UK, short term is a buy now, medium term is neutral, long term is a buy. Obviously, the election has helped the basically not just British pound but also the index as well. Hopefully, this Brexit's actually going to happen end of January, and there may be some volatility going on, but I think it's a good thing that, just personally, my view is UK is getting out of Europe and try to make more deals from outside Europe. And I think out of all the countries within the EU, I think UK is still the best one, well placed to to go much further than France, than Germany. That's just my view, but let's see how it goes. Gold, on the other hand, not much change last week. It's still, gold is short term is a sell, medium to long term is neutral, and so it's quite surprising with the fluctuation so much with the major indexes in America, UK, and so forth. You have thought gold would have gone down quite a lot, but it didn't. It still just continues sideways. It's still well above 1440, 1450 area, and just continue that way as if some sort of bottom, some sort of base, some sort of support is being built at the moment. So we just go away and see what was happening. But it's quite surprising. I thought gold would just tank, but it's not. It's just going sideways. Hong Kong index, just like Dow Jones, has been very volatile. I mean, short term is now a buy now. From last week, I changed, and medium term is neutral, and long term is also a buy now. So it's moving up. So as if local sort of election happens, local council election happens in Hong Kong, and things rioting seems to die down a bit. Still, there is rioting, but it's not as bad. And things seems to improving a bit. So all the disruption slowly is stopping, not completely yet, but at least it's a lot better. And the market seems to happy in Hong Kong, so that seems to be going on as well. Also, Alibaba has gone back to Hong Kong, basically selling shares through there. So that's also positive to Hong Kong as well. Next is Nasdaq. And similar to Dow Jones, basically short term, in medium term, long term is all a buy, but it has been a bit of fluctuation because all this recent news. Nikkei has gone basically buy across the board, medium, short, and long term as well. There's a little bit jittery, just like any other major index, but it's all pointing upwards. So one of the surprising things in recent months is I think Nikkei is continuing going higher and higher and higher, so it's getting there. So maybe a good omen for the Japanese next year. I think doing some sort of there's some games going on over there, so it'll be good for them anyway if they can keep the yen down, because that'll be easier. More people. Cheaper exchange rate, more people go and spend over in Japan. Hopefully that bring the local market going back up. So watch this space. Next is silver. It's very similar to gold, just exact same as gold. Short term is a sell. Medium long term is basically neutral. The Chinese yuan, US dollar against Chinese yuan. This is very, very volatile. Short term, medium term all gone to sell now. Long term is neutral. Last week, short term is still a buy, and medium term is neutral. Now, the medium term is turned to sell. What really happened is, I think, it just this recent tweets about possible deal with China, between US and China, and basically, I think on the Chinese yuan has strengthened like 4 cents against the US dollar, and it really go back down, up, strengthening, and then now it's come back down again. So it's very far up and down within a couple of days. So it's a lot of movement over there. So definitely this trade deal, whatever it is, has definitely impact between the currency, between US dollar and Chinese yuan. So watch out. Next is Japanese yen, US dollar against Japanese yen. Short term is a sell, long and medium term is a buy. So it's sort of, Japanese yen has been trying to break back above 200-day moving average many times, and this time seems to be holding. So let's see how it goes. The next is obviously the British pounds against the Japanese yen against US dollars is buy across the board, short, medium, long terms all across the board. And Bitcoin, as before, like last week, short term and long term is sell, and medium term is neutral. It's quite funny if you look at YouTube's and other news online. There's a lot of people say, there's a quite a bit of camp saying Bitcoin is going down to the pants, 3,000, 6,000, whatever that turn is, or 5,000. But it's also a lot of people thinking there's some, this just made temporary hiccups, and people still looking at 10, 20, 30, 40,000 for Bitcoin. So I don't know, but as far as my system's telling me, it is a sell at the moment. Okay, so before I stop, I think there's a big lessons to learn here for the British pounds. Let me go back to my chart. Okay, so recently, if you have been looking at the British pounds, you're a currency trader, the pounds has been quite well, basically against the US dollars, doing quite well US dollar against the Japanese yen as well. I mean, the whole thing started off in about May, April last year, and the British pound really loses strength and not doing well, and really go back down against these two in US dollars and Japanese yen, and back down to about August, September time, when Boris Johnson came in, and Theresa May lose out, and then the pound basically strengthened because they knew Boris Johnson is more, towards the Brexit. It is more, more determined and got a charisma to do things. Okay, there was some hiccups how he had handled this Brexit and try to renegotiate things with the Europeans and come back. The UK government, rejected all, and then he called the general election. But overall, you can see the chart pattern on British pounds against US dollar and Japanese yen is quite positive, and you actually sees it, and then it's moving ahead, basically across the board, more or less, against other currency, and the trend following system actually catches it, even if it has been volatile initially, when especially the changing from Theresa May to Boris Johnson, the change of guard, so to speak, that's a bit volatile, but more or less it's been upward trajectory, and the trend following system caught it. Okay, it caught it from basically when the British pound was going down against US dollar and against Japanese yen, and then caught it again, recently from October, basically going up from October onwards to now. So for example, you go back and just look at specifically British pounds against Japanese yen. Okay, if you have a chart in front of you, look at it from. If you have a 2 ATR system, just like what I use, draw a line on your chart and things like that, you have caught, from May until August this year, there was a major downtrend, and you can call 10, I think it was like 10 yen or something, caught quite a lot of, I think 14 yen, quite a lot of big movement in there. And that's spaced across 3 months, 3.5 months of kind of thing. So this is what trend following is. Okay, it takes some time to actually establish. When it's established, it should just run. And the real thing here, trend following, different from other trading thing, is it first of all it just does not try to predict. It doesn't know. As far as just very human, just like I don't have a crystal ball to tell me where certain price is going or not. So we just basically follow the system, and the system keep on saying stay there and stay there and stay there and stay there until from May to August, again from October and up to now, still continuing on this time is on the buy side now. Now both of these times, if people trade British pounds against the yen or British pound against US dollar, they will make quite a lot of money this year. But only if they have catch the big trend. So first of all, trend following is you're looking at big long trend and you try to catch them. Problem is you don't know when. If it happens, how long it takes. But if your system says so, take it and just continuing. The most difficult part I feel personally when I get my head around on the trend following methodologies, you try to catch long-term trend. It takes weeks, months, sometimes maybe years. Okay, and you will have this tendency in your mind to say, "Oh, I'm going to lose out. There's some negative comes out now. Oh, what happened? I'm going to better put the money in my pocket, close the trade, and get the money put in the bank, and don't follow the system." That's especially this long-term running of a trend. People feel worried, scared, emotionally, money more or less emotionally burning holes in the pocket, and they really worry, and they don't follow the system. And that is the one thing that I want to put forward to people, that trend following is long-term thing, but also it's not just a mathematical thing following the rules. It's very much a training for your mental state as well. You need to have the maturity to follow through the system. It's no point whatever system out there. Okay, they have so many win rate or whatever. They might say on paper it's fantastic, making all this money, but when you, as an individual, actually take that methodology or strategy, whatever tactics it is, and if you did not follow through exactly what it says on the tin from the strategy, you are not going to make the exact outcome as what is projected or shown by you, whatever method you bought or set up yourself. Okay, this is quite something that you need to learn from. So in trend following, it really boggles people's mind that how they can hold on long term and not to cash out, so to speak. The system still say sell, don't do anything, sell, don't do anything for months. And then you keep on having your money building up. A lot of time, probably a lot more than what you used to, And then every time there's negative news coming up from the market and the price moves down, it hasn't touched the stop loss yet, and you move down, you say, oh no, I'm going to lose all this money. And a lot of people just haven't got that mental mindset to say, all right, I'm not going to do anything until my system says so. Okay? And hold on. And that, for me, I tried a couple of times. It's really mind-boggling. It sort of, it doesn't hurt you physically, but hurt you mentally, because you just thought, oh, crap, I better take this money or I'm going to lose it. But my system say, it's still a sale. Don't touch it. Just let it go, let it run. This is a rule number one. Cut your losses quickly. Let your winner win. If the trade is winning, let it run. But this rule, nobody tells you the mental challenge to you. Depends on how your makeup mentally is. It could be quite very, very challenging, especially you're not used to. You used to short-term thing, just something very quickly, in and out, within an hour, within days, maybe a couple of weeks, that kind of thing. And suddenly you're faced with a long-term system like trend following and tell you for months don't do anything. And your money is slowly piling up, but you think, oh, it's not going to lose now. It's not going to get, disappear now because, one reversal can take everything out. And people so worry about, the trading thing because they somehow they have a predefined mindset or feel bias to say, oh, it's going down, therefore it's going down, just that's it, and just going to go down. But the price of the market to say, no, it's not going down, it's going up. And people, don't have their head screwed up that way. Just always think, the market have to bend towards your view and do whatever you think, and it had to follow whatever you think. But no, the market's got to do its things. The best you can do is have a system that catches the trend and have the mentality and maturity and the skill to follow it through. So if you've been using trend following system and for the last, 9 months, so to speak, 6 to 9 months, you make quite a bit of money out of British pounds trade. That's for me anyway. And I think that people should look at the British pounds against Japanese yen and against US dollar and try to learn from it. The type of breath that it takes, the time frame it takes. It's not I've got nothing against day trader, but day trader lose out on, have to go back in and out every day, whatever time frame you are, and forget about it. Could be a long trend. That long trend takes months, maybe years to set up, and you keep on going in now. Okay, now you don't have all this. I think some brokers actually have zero, a commission going in and out of the market, but then you still have to go in the market all the time, back in and out. And sometimes maybe the best thing to do is go in, use a long-term system, and just sit there, wait until long-term system say turn, and you make a lot more money that way. Now, that's just to me anyway. I find it much better using this kind of system, especially from my bottom of my heart. If you are a very busy person, you really don't have time to sit down. You want to catch the big trend. Trend following system, in my view, using enough data is the best. And it seems to work for me. It's just my strategy. It seems to work for my lifestyle. I'm a very busy person. and I got a job. I got 4 kids. I have to send them back and forth. And anybody have kids? I have 4 of them, and they're ranging from going to university, from 13 years old, the youngest. So a lot of activities going on behind the scene in the house, and also I'm trying to do trading, and also I got a full-time job as well, that kind of thing. So as far as I'm concerned, this trend following, it fits my personality, but it took me a long time to actually learn it. And this is very much an example that, British pound against the yen, if you actually grasp this as an example and try to dissect it, understand it, and maybe follow through next time something similar happens to you like this, then you see the power of trend following really can make you a lot of money. But it takes a lot of mental maturity, skills as well to actually get it through. So I hope that you will go in and dissect this, British pounds against Japanese yen, and have a look for yourself and learn from it. And I think that's one of the things that you should be able to take some lessons out of this, and then and hopefully you can make some money next time with similar things happening. So in the meantime, if you have any issues, want me to dissect a bit more about the British pounds, Japanese yen things, email me. And I'm going to put it in my description for this podcast, and just we can chit chat and talk about it. Okay, I hope you like this episode, and I speak to you soon. Bye.